71% peak to trough decline. It's 290 high in August, a long time ago. It made a low, though, and this is key, on February 24th. So it's the first of all of these to bottom. That's almost 3 weeks ago at 83. If you remember that chart, let's look at the next one, exact same time frame. And what do we know? We've moved above a well-defined downtrend line, and we have put in the early makings of a reversal. Doesn't matter whether you call it a head and shoulders bottom. The key is that it's been underway for almost 3 weeks, whereas the others, some of the others that I listed, many of them were making new lows as recently as 1, 2, 3 days ago. So let's look at those exact same charts, but longer term. And this then begs the question, when you start to bottom, is it a midair stick save? Did it just happen out of nowhere? No. Look exactly where this stock starts to bottom, at support. That line drawn along the tops is simply the peak before COVID, and you can see it's a well-defined level. The stock has found support down 71% and has started to bottom 3 weeks ago. And today's action confirms final chart, well, two more actually. There's the minor head and shoulders bottom at support. And then the final chart, and this is the most important, where might it be headed? So a simple exercise would be simply back to the smoothing mechanism, the 150-day moving average. Now that's way up there at 190, but remember, it's declining quickly. And so I think the two meet, price and smoothing mechanism, are around 155. That's 30% higher from here.
30% higher from here. Wow. Carter, thank you. Carter Worth of Worth Charting.
Now, Mel, you got a total visual when he referred to the midair stick save, right? I mean, that was
I had no idea what he was talking about, but I know that you guys know what he's talking about. So
absolutely. Hockey metaphor. Like, you know, good stuff. Sorry to interrupt. It's your show.
Guy, you're nodding your head back to regular programming here. You're nodding your head on the charts.
No, because I go back to October of 2018. I think the stock at the time, Square, made an all-time high, like 93. So Carter drew the line for you. As he says, the lines draw themselves. And, you know, you take a 50% retracement of the all-time high and the recent low, you get 175-ish dollar stock, and that's exactly the level he's talking about. And quite frankly, given the environment we find ourselves in, that's not that far-fetched, Mel.
Karen, how do you feel about the valuation still?
Well, it's lower, right? Is it cheap? I don't know. But it deserves to have a premium for the space, I think. When you, so it's actually somewhat appealing to me. But I haven't bought it. Although I got to say, I did buy some Affirm. I did buy some Affirm.
So the traditional names like Visa or MasterCard, they had underperformed all of the new tech banking stocks, so whatever you want to call them du jour. But if you look at SOFI now, it's down 45% pretty recently. So the chart doesn't look dissimilar to a Square chart, but the problem is it has not bottomed yet, as Square has. So if on the risk curve, this is definitely a riskier name, but you have a lot less downside to worry about if you wanted to dabble in SOFI as well.
I just say if you look at the gross margin on a two-year stack, and that's the most important thing, you're at about a 71%. If you look at the multiple, you asked Karen about it, it's probably about it's about 8 times EV. The pandemic low was 5 to 6 times. So interesting relative to itself. I do think the stock's interesting here.
All right. Speaking of payment stocks, here's a sneak peek at the Kramer Cam. Jim is talking to the CEO of American Express. You can catch the full